Good morning, good afternoon, and good evening to our valued listeners of the Gspröch podcast. As ever, thank you once again for taking the time to come back and listen in. And to our new listeners, thank you for giving us a try. And I hope that we continue to provide everybody with great content around the institutional adoption of digital assets, and what an interesting podcast we have in store for you all today. My name is Stuart Peterson, and I am your regular host of the Gspröch. In this episode, I'm very pleased to welcome back our first ever returning guest to the Gspröch, Muhsin, partner of international Turkish law firm Esin Attorney Partnership, who are also a member of Baker McKenzie International. Muhsin first joined us on our podcast back in July 2024, following the publication of the cryptocurrency bill by the Turkish government. Back then, Muhsin shared his legal expertise and insights on the impact of the new bill for CASPs in Turkey. Muhsin also explained that, as a primary piece of legislation, we could expect further secondary regulation to emerge in the near future. Although this secondary regulation was muted to be announced around October 2024, this year, on the 13th of March, the Turkish Capital Markets Board finally published two communiques introducing the new rules on the types of activities that can be undertaken by CASPs with an appropriate license from the CMB. These new rules also outline the principles with which CASPs must comply when carrying out their activities, the process for listing crypto assets, the rules for custodian of crypto assets, and the capital adequacy requirements for CASPs. If you haven't yet caught up with our first episode of the Gspröch podcast with Muhsin, you can find it on our YouTube channel. For the benefit of those who have not yet seen the first podcast, Muhsin, welcome back, and it would be great if you could provide us with a short introduction to yourself and Esin Attorney Partnership, and specifically what you do in specializing with regards to crypto and the digital asset industry. Over to you, Muhsin.
Well, thank you, Stuart. It's great to be back. Great to be with you almost after a year or so. My name is Muhsin. I'm the head of banking and finance and co-head of fintech practices for Esin Attorney Partnership, which is a Turkish law firm based in Istanbul. We are a full-service law firm serving our clients through 18 dedicated practice teams, including banking, finance, and fintech. Obviously, I will be happy to comment on what these two communiques are bringing, in addition to what we have discussed. I think it was last August or so. In terms of the framework for crypto asset and related services in Turkey.
Thank you, Muhsin. I think that's actually a very good place to start. Before we dive in to look at the secondary regulations that were announced on the 13th of March of this year, maybe you could provide us with a short recap for any of our listeners who may have missed the first appearance on the Gspröch. Bring them up to speed on the developments last year and the introduction of the crypto bill.
Well, sure. As we discussed last time, the first ever crypto law was published last year in July. And until then, although there were many players in the market, more than 100 players, this area was not regulated at all, except for a very minor regulation for the use of crypto assets for payment purposes. So that was the very first major law regulating the area, bringing in the principles to apply to crypto asset related service providers, subjecting them to the jurisdiction of the Capital Markets Board, which is the capital markets regulator, as its name would propose. Although it was the very first and major legal development in terms of regulating the legal framework in this area, it wasn't a complete move because from the way we enact our laws, the laws generally provide the principles, the basic rules and regulations, and then the discretion is provided to the regulator of the area so that they can further regulate the area, the business, the players, the operations, and everything. And this is what happened with the two communiques. the law provided the authority to provide these communiques to the Capital Markets Board, and they were supposed to bring them to the market by the end of the year 2024. But a bit later than that, in March, as you said, we had these two communiques, one regulating how the crypto asset service providers can be established and what their corporate governance should look like. The other regulating the terms and conditions of the services that they can provide to their clients, the details of their operations. So now we have a complete legal framework in terms of how a crypto asset service provider type player in the market can be established, and then how its life will look like, what kind of restrictions, limitations will apply to their operations and everything. Of course, the legal framework is completed now, but this doesn't really mean that it's not open to evolution. So most probably, by experience, there would be further changes, further regulations, especially on the technology side, that are regulating crypto asset service providers and these assets. But for the time being, I think we now have the regulatory framework above which these institutions can be constructed.
Thank you. And, if we could sum up what you think is what is the actual overall purpose of the secondary market regulations over the first? I mean, I know we've had two communiques, but what is that general purpose of the secondary regulations? Was it more around technology? Was it more around legal framework? Was it more about capital? I know we'll come on to the capital requirements in a little bit, but do you think was the sort of main purpose of the secondary regulations? To tighten up something?
Well, the purpose basically is to ensure safety of the market. When if financial service, when a capital market service is not regulated, then obviously there would be legal risks, there would be regulatory risks, there would be financial risks, there would be all kinds of risks that the investors can be subject to. And if you can ensure the investor confidence in the market, then the market cannot develop and cannot be bigger over time. So just to make sure the rules are certain and these institutions and their services would be audited and supervised, the legal framework was laid. So this is the basic purpose of the law plus the two communiques, I can say. When you look at the details of the communiques, I cannot say that their major focus is technology. I think the regulations relating to the technology, the information systems, software, hardware, etc., that these institutions will be using for their operations will be further regulated, and especially by an institution called TÜBİTAK, which is the science agency of the government. So this is not the specialty of the capital markets regulator, obviously. Aside from this technology point, when I look at the communiques, I see that their major focus is the corporate governance of these institutions, together with the soundness of their capital and financial sources and the limits of what they can do and what they cannot, so that the soundness of the capital, the sources that is ensured by these communiques wouldn't be jeopardized as these institutions develop into their market operations.
Thank you for that, and I think that's a great summary of where we are, what the main drivers are, and the intent and purpose of the secondary regulations. But maybe a question for you. We in the European Union, as we all know, it introduced its own regulation on the 30th of December last year, the MiCA rule, or marketing crypto assets. What kind of maybe impact or changes have the new rules like MiCA in the EU had on the Turkish regulations?
Well, when I compare both set of regulations, I can see there is an influence by MiCA. But as far as I see, that influence is, for the time being, very limited. And the reason for this, I believe, is the fact that this area is left to the discretion of the Capital Markets Authority. And although crypto asset related services are not capital market services or investment services as we know them, the regulator has opted to regulate this area as all the other investment services providers, such as broker dealers, such as custodians, such as portfolio management companies, investment advisors, etc. So this is why the regulations are more like local capital markets related regulations than the international peers in terms of crypto asset regulations. But over time, my expectation is this will change, because at the end, as in my experience dealing with the Turkish capital markets regulator in terms of their regulating of a new area, they generally put together their regulation, submitted to the market, test it for a couple of years, and then see what works best and what doesn't really work, and they try to remedy what doesn't really work. So after the experience is developed in the market dealing with these two regulations, most probably the capital markets regulator will handle them once again. And by then, most probably the international examples like MiCA and maybe the other regulations that will be developed by then in other jurisdictions will be the capital markets regulators' pillars to build the new regulation on. But for the time being, as far as I see, these two communiques are not there.
Yeah, thank you for that. And even in the European Union, we're getting feedback from different organizations about their views on MiCA and how good, bad, or indifferent it is. And clearly, it's not just a new asset class or a new protocol or a paradigm. It's a combination of everything. Is it an investment? Is it an asset class? Is it a store of value? Is it a transfer agent? So in that respect, we're definitely, I think, going to see a modification of the rules as they change over time, as the market matures. And if we see a progressive regulation, not just in the EU under MiCA, but also in Turkey, and every regulator looks at the different regulatory jurisdictions and seeing what are the feedback, good, bad, or indifferent. Hopefully that will provide a global regulatory framework that will allow digital assets to thrive, for many, many years to come. So maybe if I can switch now to really around the services, banks and brokers and exchanges and other institutions who want to become CASPs and have applied for their CASP licenses. Obviously, they have a very specific set of ideas in terms of the products and services they want to bring to market for their retail and institutional customers. So maybe you could just reframe again for the audience, what are the kind of main services that will or are going to be regulated under the new rules?
Well, we currently have only a handful of crypto-related services that are regulated by these two communiques. And these are the basic services that everyone can think of when it comes to investing in crypto, trading, distribution, offering, custody, and investment advisor services concerning crypto assets. But the door is open for new services to be regulated, and the regulation, the communique is drafted in a way that the capital markets regulator has the discretion to further regulate any service that they believe would be relevant to crypto assets. So as these institutions that will be obtaining their operation permits, hopefully sometime this year or early next year, develop their operations. As the technology solutions develop, I'm sure we will see a need for other services, and the capital markets regulator wouldn't be late in regulating them by when such a need occurs. So we'll see along the way, as far as I say.
Absolutely, and that's a lot of the feedback we've been getting from institutions in Turkey. But if I'm not a Turkish institution and I'm a foreign offshore company and I want to become a CASP, what kind of rules would govern me? We've seen for a number of the international exchanges, for example, wanting to set up in Turkey, and because Turkey is a very fertile market for crypto, a large proportion of the Turkish economy does have access to crypto and wallets for payment services. What are the rules that would govern a foreign CASP?
If they would like to invest in this market, they will have two options. One is quite clear. They need to come here, apply for the establishment permit by the regulator. Once they have that permit and they establish their company, that company satisfies the conditions for the operation license and applies for an operation license, and then they start operating in Turkey, facing the investors, the clients in Turkey. If they don't want to spend that much time and money, then principally they should be away from the market, except on a reverse solicitation basis, i.e. They should not be promoting, they should not be soliciting or otherwise marketing their services or products towards the investors that are resident in Turkey, because this would mean that they are de facto operating in Turkey, triggering the licensing requirement. And without the license, if you engage in these kinds of activities, then things can become criminal, as this would constitute unauthorized crypto activity, which is punishable by both prison time and monetary fines. But of course, this doesn't really mean that Turkish resident clients cannot reach out to them without them engaging in any kind of such promotion, marketing, solicitation in Turkey. The reverse solicitation principle that applies to the offering of financial services on a cross-border basis in various jurisdictions will also apply here. So, for instance, as a Turkish crypto investor, I go out and establish my connection with a non-resident crypto platform, crypto exchange, and have my account there to invest in the crypto assets that are listed on their exchange, then I can do this. Because at the end, this would mean I'm establishing as the Turkish resident party, the Turkish resident investor relationship on my own initiative without any action or without any kind of marketing that is targeted towards me. So this is permitted, and if you don't want to make the investment to establish their Turkish entities and businesses, then obviously they should limit their exposure to Turkish investors to such reverse solicitation basis relationships only.
Okay, thank you. I think that's very comprehensive explanation around the rules around foreign CASP, particularly around the penalties that could be financial, punitive, or even in prison as well. So we're Wyden. We're an infrastructure technology provider to CASPs and a number of CASPs in Turkey. We would love to actually understand and learn about what are stipulations for CASPs regarding, for example, the procurement of any form of outsourced service. Could you perhaps expand or elaborate on any forms of those operating conditions?
The CASPs, the crypto asset service providers, are permitted to outsource services to third parties, procure services from third parties. But as in all other financial and capital markets services, they are not totally free to procure services from third parties. There are limits to their ability in this regard. First of all, there are things that their board of directors would be personally liable for. So those kinds of tasks cannot be outsourced to a third party. They cannot also outsource their core business to a third party and the related marketing activities to a third party. But aside from that, they can generally outsource services to third parties, with the exception of accounting, financial reports, preparation, internal audit, internal control, and risk management. The service provider does not really have to be a resident entity, so they can work with non-resident service providers such as Wyden when they procure services from third parties. But if the third-party service provider is providing services to them, then there is just one rule that they have to observe, which is the third-party service provider's jurisdiction must be a friendly jurisdiction. By friendly, what I mean is if the regulator would like to go ahead and conduct an audit on the services provided by such service provider, then such jurisdiction, the laws of such jurisdiction, shouldn't be precluding the regulator from doing so. There shouldn't be, for instance, data sharing restrictions, etc., that would disallow the regulator to conduct such audit on the service provider. But as long as it is okay from a legal perspective that our regulator can require information, can require reporting, can require permission from the third-party service provider to access to their information concerning the services that they are providing to the Turkish CASP, then it's okay for the Turkish CASP to work with such a non-resident service provider.
Thank you. But what I also want to bring up, and having read the regulations to the best of my ability, not being a lawyer, there are numerous references to on soil. And what we understand is by the end of this year, all systems, data, and processing must be performed within the Turkish borders. Could you please elaborate on that?
Yes, sure. Well, the on-soil requirement comes from the General IT Systems Regulation of the Capital Markets Regulator. Mm-hmm. There has been a recent change to that regulation, and now the crypto asset service providers are also subject to that regulation, meaning that they also need to establish and maintain their primary and secondary systems within Turkey. Primary systems are the information, the hardware, the software that the crypto asset service provider would be possessing and using to perform their obligations arising from the regulations that they are subject to, plus conducting their crypto asset related operations. And the secondary systems would be any kind of backup to the primary system. So these two systems must be maintained in Turkey. And this is quite a key role when it comes to regulating financial and capital market services in Turkey. The regulators are generally sensitive about the maintenance of these two kinds of systems onshore in Turkey. How this affects service providers is, while this is the obligation, this is the requirement, this doesn't really mean that the crypto asset service providers cannot use cloud services from third parties. They can. But when it comes to a cloud service, then the on-soil requirement is triggered, meaning the cloud service is it also needs to be maintained onshore in Turkey. And when I consider the technology services that crypto asset service providers are procuring from third parties, and also the other fintech institutions are procuring from third parties, well, most of it is basically cloud services. So the service provider will need to establish its cloud systems onshore in Turkey so that the service provider can provide such services to the crypto asset service provider. There is one exception to this rule, which is the on-soil requirement doesn't really apply if the cloud service is only provided for price matching services. But even in that case, the service providers is expected to have a representative office in Turkey, which is not a commercial entity, but basically an office in Turkey. To the extent these requirements are satisfied, then it is okay for a crypto asset service provider to go out and procure services from third parties, even those third parties are not resident in Turkey, or even their systems are not located in Turkey.
Thank you. That's very, very specific. So, if I understand correctly, if I'm a Turkish CASP, and I can actually take technology via on-premise deployment, whereas I'm running it myself within my own servers or in my own private cloud infrastructure, or I can use a cloud service provider if that cloud service provider also has their infrastructure resident in a Turkish data center. The only exception would be for price matching, but then that the technology company would have to have a representative office resident in Turkey, correct?
Yes, correct.
Perfect. Thank you. I think that really sums it up for our audience. Now let's move on to transition periods. There are transition periods for CASPs. How long is this with regards to the overall regulation and also the new secondary regulation?
Well, the regulator had almost 9 months to publish the communiques, but the players, market players, do not have that much time for the transition. This is not a criticism, I'm just joking. So the communiques provide a couple of different dates for the obligations that they are bringing to be observed, to be satisfied. But generally, I can say the deadline is the end of June. The existing crypto asset service providers that are already listed by the regulator after the law was published last year for the interim period until the communiques are published, will need to apply for an operation license by simply satisfying the obligations and requirements that are set out in the two communiques by the end of June. And as far as we see, there is quite a preparation work going on in the market by the local players, the number of which is more than 80 for the time being. My expectation in terms of how many of them would be applying for the operation license is not that many. I'm expecting around 20 to 30 players to satisfy all these conditions and apply for an operation license. And the major issue for the ones that wouldn't be applying for the operation license and opting for liquidation would be the capital requirements, capital and equity requirements. But at the end, the bigger players will be continuing with the process, continuing their operations, having made their applications by the deadline, whereas the small ones will most probably vanish from the market.
Okay, so we would see probably a contraction from, I think, the 85 or so that have applied for their CASP licenses, and really will be down to 20 or 30. That's a very interesting insight. And as we are drawing close to that implementation date, what do you see as some of the biggest compliance risks for CASPs?
As far as I am concerned, I see 4 major topics to focus on for the transition, for the satisfaction of the corporate governance related requirements in the communiques. These are basically the information technology systems, capital and equity, outsourcing, and personnel and team, I would say. Well, out of these 4 areas, I think the least problematic would be personnel and team, because as far as I see, even the smallest player in the market has a very sophisticated and dedicated team of financial professionals. So it should be okay for each of them to satisfy the obligations from the personnel and team perspective. Capital and equity, as I said, would be problematic for most, and they will be eliminated just because they cannot satisfy the minimum requirements on this front. I think the biggest compliance risks would lie with IT systems, the information technology related related obligations and requirements, including outsourcing, because there have been no limits or there have been no restrictions on a crypto asset service providers' ability to procure services from third parties. And just because of that, plus the effect of having smaller equity, smaller capital for their operations, they have been outsourcing most of their functions to third parties on an economic basis. So it shouldn't be easy for them to set up their own systems and infrastructure and architecture. That also includes hiring people to simply become compliant with the outsourcing and IT systems restrictions we just discussed. So most probably the compliance, the difficulty in terms of compliance with the new communications would lie in these two areas. And these two areas might be another factor to eliminate the more than 80 crypto asset players through the operation license process.
Thank you for that. I think that's something that a lot of CASPs have to consider when they want to finally go through and get their license and go to market. I think one last question I have for you is that even though earlier on we talked about that the rules will change and evolve over time, the CMB will see how the market evolves and make changes. Are there any prescriptive updates for the rest of this year? Because obviously with the initial regulation last year and then the secondary regulation coming on the 13th of March, are there any published additional third or fourth regulation updates this year, or is it secondary regulation and that's it? And then we'll see what updates happen organically over time.
Well, as far as I know, there is no determined agenda for these regulatory updates yet. But my expectation is there should be further development on the technology legal framework applicable to these players. So I'm expecting more regulation concerning the information technology infrastructure and architecture of these firms by the second half of the year, but I'm not aware of any specific agenda for that.
Thank you, Muhsin, and thank you also very much for answering and providing valuable insights to the questions today. And thank you also for coming back to this edition of the Gspröch podcast, providing a very clear level of clarity on the impact of the secondary regulation for CASPs in Turkey, what CASPs need to consider and how they can practically go about becoming a regulated CASP. So in the end, that they can provide their crypto products and services to their retail and institutional client base. I know it must be a very, very busy time for you at the moment, helping your clients navigate the new rules. So I sincerely appreciate you taking the time out of your busy schedule. We are really looking forward to seeing the continued stellar growth and success of crypto and digital asset institutional adoption across regulated entities in Turkey. And we at Wyden look forward to soon providing some exciting and important announcements on how we are supporting the continued growth of that digital asset adoption in Turkey, in line with all of the regulations that we've been talking about today. As ever, it's very much appreciated that you, our listener, are tuning in to the Gspröch podcast. It's amazing how many returning listeners we now have and how our messages are being amplified across the institutional digital asset ecosystem. Please also take the opportunity to reach out to our esteemed guest today, Muhsin from Esin Attorney Partnership, who I am sure will be very happy to support your organization along its pathway to becoming a regulated CASP in Turkey. And with that, I look forward to meeting with you all again on the next edition of the Gspröch podcast. Thank you.